investors and corporate. Welcome to Digital Roadshow third quarter 2024 performance review. This section will run about 45 minutes, including Q&A. Company will start the section by 30-minute presentation, followed by 15-minute Q&A. And during Q&A, investor may leave your question in meeting room chat box or use raise your hand function. We will open your microphone so you can ask the question to the company directly. So may I now invite the SIAM Cement Public Company Limited to start the presentation.
Thank you, Ka. Hello and welcome again to SET Digital Roadshow of SCC Performance Review of Q3 and 9 months of 20 and 24. Thank you everyone for joining us today. Before we begin, I would like to introduce our speakers today from IR team. Firstly, Kun Wachra, SCCR Director, and Kun Tisna, SGIR Specialist, and me, myself, Kavini, SGIR Specialist. Moving on to our agenda here today, we have 4 agenda here, and the next slide. Firstly, we just add the U.S. election outcome and Chinese stimulus policy here. We'll touch upon a little bit on this, followed by the Q3 result and the decarbonization roadmaps and business highlights. And on the pie chart, on the right-hand side of this slide, I will a little recap of SCG's assets. We are now having about $27 billion of assets. About half of 52% is in Thailand, and the rest is in regional, mainly led by Vietnam, about 28%, and Indonesia, about 12%. So we are not mainly not only the Thai player, but we are predominantly ASEAN player. Next slide. I will talk a little bit on the U.S. election outcome. There will be 2 aspects in terms of short-term benefit and medium-term. In all, we think as of now, the net benefit is positive, but I will highlight here in the short term that we can see the result here after the election release. We saw the stronger US dollar benefits chemicals business, and at the same time, we see lower oil price as the US Trump presidency outcome just have the benefit on this industry. So all of these 2 aspects would lead the direct positive impact to business, especially in the chemicals industry. In terms of medium term, we need to wait and see for the execution under the Trump presidency to be released. But we highlight here as the presumption of our thought recently about the medium term aspect. So we need to fine-tune and need some time for the outcome and execution to be seen. And next is the not only US just released the update, but China as well. We just see the Chinese stimulus policy packages. Several of a series just released last month and earlier this month. And we expect that this is to be improved, especially in the Chinese domestic demand in the next 6 or 12 months. So in all, this is a macro view of our registration here, and I will move the floor to Kun Wachra to talk about the Q3 highlight. Please, Ka.
Okay, thank you for that. For the next page, I'd like to highlight what happened in the third quarter, which we released at the end of October. What you see here is that earnings dropped from 3.7 billion in the second quarter, dropped down to 721 million in the third quarter. The major thrust of this would be the lower chemicals performance brought on by the inventory loss as product prices dropped. The FX dropped mainly because of the stronger Thai baht. I think over a 3-month period, the Thai baht strengthened by almost 2 bahts. So that effectively caused us to have the FX loss. Sorry, it was the other way around. Another aspect of that is lower margins. Basically, margins dropped by about $40 per ton. And in addition, during September, when we were ramping up for the startup of LSP, there were additional expenses to be had. So that's for the chemicals division. In the cement-related division, you will note that 2 months ago, there was a lot of flooding in Thailand. And at the same time, the government projects were somewhat delayed. We have some more details for you on that aspect to highlight what happened in the chemicals and also the cement business. For packaging business, they took a higher stake in Faja in Indonesia. They ramped it up from 55% to about 99+%. So that resulted in increased minority loss. And lastly, the company executed the interest rate swap. So that resulted in a cash gain, a material cash gain, result in the total third quarter net profit of 7+ million baht. Next page, please. This page shows you on a 9-month year-on-year basis for each of the business units. You will note that the cement and building materials division, in addition to Decor, which is our ceramics related business, on a year-on-year basis, it gained in performance, while the packaging and the others business units held its own somewhat. But I think what happened is that in the chemicals business, you see a sharp drop in earnings on a 9-month year-on-year basis, and that's attributed to what we have highlighted there: inventory loss, FX loss, lower spreads, and LSP expenses. Next page, please. On an EBITDA basis, despite lower earnings, you will note that earnings are one thing. The EBITDA, which is a cash flow, it reflects the somewhat solid performance of the company. We registered almost 10 billion baht in EBITDA for the third quarter. Partly in the fact that with the startup of LSP, particularly going forward in the fourth quarter, there's a lot of depreciation charges coming through from LSP's expenses. Next page, please. In terms of financials, cash dropped from 70+ billion to 40+ billion, and a large chunk of that was due to the payment of 23 billion for Faja, which is the packaging business's acquisition, additional stake in Indonesia. Otherwise, everything else remains fairly solid. Interest cost is fairly competitive, and we were able to resubscribe our debentures with a high resubscription rate of 90+%. Next page, please. On a CapEx basis, you'll note that CapEx jumped somewhat, and this is the result of the 23 billion acquisition by SCGP in Indonesia. The full year 2024 CapEx guidance is estimated to be about 60 billion this year, so higher than the past 2 years of 2022 and 2023. But going forward, we see that the Faja acquisition is the one-time acquisition, and the guideline for 2025 is approximately 30 to 40 billion. So another steep drop in terms of CapEx going forward. Thank you. You'll note that in light of the challenges in the volatile industry macro environment going forward, the company has come up with 3 action plans: immediate focus for this year, short-term focus meaning for 2025, and medium term. What we're doing for the second half of this year is basically reducing debt further through working capital efficiencies. This is expected to extrapolate about 10 billion baht by the end of this year and next year. We are discontinuing and winding down operations. I think we've done 2 already. One is the logistics related, SCG Express. The other is the software related development company in India. And we are addressing 10 to 15 other operations that needs to be reviewed and shut down. CapEx will be leaner, as I mentioned earlier, whether it be this year or next year. And LSP is looking to restructure its debt profile and result in lower interest costs for itself. The interesting aspect is for next year. I think the company is looking to divest some assets for early 2025, and we're looking to deliver additional savings of 5 billion through winding down non-profitable businesses in addition to SG&A reductions. Medium term, we're expected to execute a key project there that's on second bullet, which is the ethane project. That's expected to come in 2027, and my colleague will have details for you in the chemicals portion. Thank you. On the next page, what you'll see is that on a macro basis, the election is somewhat positive for SCG because it results in lower oil prices, and it allows for a strong US dollar, resulting in FX gains for us. On SCG specific, I mentioned earlier in terms of executing the HVAs and the ethane project in Vietnam. For the cement and construction related business, what played a pivotal role in terms of earnings for the cement business is the low carbon cement. This allows us a lower cost structure, more competitive fundamentals. So I think we're expected to do that further with Generation 2 for this year and next year. And obviously for the solid financials, that remains the SCG hallmark. Next page, please. For the outlook for Q4, we expect the chemicals business to see continued overall supply glut. And in addition to that, Q4 is seasonally the soft season as the industries wind down the year before they ramp up again in the first quarter of next year. We continue to see low margins for the chemicals business, at least for the first half of next year, because of the oversupply, as mentioned. While the Chinese stimulus program continues to ramp up, we're seeing some of that already. But we need to see continued progress on that aspect. The fourth quarter, what you should see is that despite the startup of LSP, I need to highlight the fact that LSP was shut down in the middle of October. Despite being shut down due to the low chemical margins, there are some fixed costs there to the tune of 2.5 billion baht. So that's about 850 million baht per month. That's primarily the depreciation and interest. In the construction materials business, what we are seeing now, despite the delay in the third quarter, government works is coming back big time, and we're looking for year-on-year demand growth to be at least in the low double digits for the fourth quarter. Thank you. Next page, please. And this is my last slide here. I just wanted to mention that a lot of investors, particularly in the European space and in Japan, often ask us about decarbonization. Our plan is comprised of several matrices because items 3 and 4 are further down the road. I'd like to highlight the first and second one, which is low carbon products and energy efficiencies. The key here is that these two components will allow us to decarbonize by at least 50 to 66% over the next 10 years. So there are more details in the following pages by my colleagues to highlight this for you. Thank you.
Okay, let's move to the business highlights, starting from chemicals business. For SCG Chemicals, we'd like to provide current updates on the LSP or Long Son Petrochemicals in Vietnam. This project is successfully started commercial operation for the whole complex on September 30th. After completing the test run, the plant's performance is in a good condition and it can produce the products that meet customers' specification. However, in the current market situation, that is still under pressure, with the product spread is relatively low, we have decided to do the commercial shutdown from the mid-October in order to mitigate loss. In this situation, we will closely monitor the market and while optimizing three crackers, the ROC and MRC in Thailand and LSP in Vietnam. At the same time, we are focusing to increase the HVA products with have the higher margins, especially in Thailand, and we will further extend to Vietnam market in the future, as it might need some time to educate the market in Vietnam. And in addition, we to increase the LSP competitiveness, we already announced the ethane enhancement project. This is to improve the cost position and add feedstock flexibility at LSP. The overall investment is about $700 million, or about 23 billion baht, which is funded by the SCC internal sources. The majority of the investment relates to handling and ethane tank storage, which it needs especially designed tanks that can keep the gas under the temperature of minus 90 degrees Celsius. We will source the ethane gas from North America with the long-term contracts, and technically LSP will be able to utilize ethane up to about 65 to 70% of the feedstock mix. However, the mix can be adjustable depending on how we will optimize the cost and product output at that time. This project is expected to be completed by 2027. So in short, we would like to improve the LSP competitiveness by using ethane, which has a cost advantage over naphtha, as you can see in this graph. And currently, LSP is already the swing feed crackers that can use both gas and naphtha. And what we will do more is to add ethane gas as an alternative feedstock, which LSP can utilize it at the competitive cost position, as ethane has a less price dynamic, while naphtha is influenced by the oil price, and propane price could jump up during the winter season. And the next is another update on the green polymer, which is the progress of the recycled business. In the past quarter, we already introduced the new products by collaborating with the brand owner. For example, the recycled shampoo bottles from PCR HDPE and the recycled PVC ties from used dialysis solution bags. Most of these products are consumer products, and they have the high value added, and this highly contributes to our green polymer portfolio. So next part, Khun Pavini will provide you some progress of the cement and construction related business.
Thank you, Khun Tisana. Moving on to cement and construction business, I will highlight the big picture of the demand growth of the Q3. As you can see in the red block here, there's an improvement of the demand growth both in Thai market and regional market. In Thai market, we saw improvement as the minus 0.5% growth year on year, compared with the last quarter, which is negative 9% growth, and it is driven by the government budget disbursement, which is continuously releasing during the third quarter, and mainly contributed to the infrastructure sector. And we saw the same trend in the regional countries, especially in Indonesia. We saw the improvement constantly, and it is turned to positive growth. And at the same time for Vietnam and Cambodia as well, and a little higher in the Vietnam and Cambodia due to last year was a low base factor. Next slide, please. Next slide. This is the overall earning from the cement and green solutions. In terms of profit, we register about 2.1 billion baht as of a 9-month period, compared with 1.7 of the last year. This is the benefits of the low carbon cement that we will talk about later on, and as well as the alternative fuel that we actively use. Next slide,ค่ะ. Here is the update of the low carbon cement, and we are now at the Gen 2, which can reduce the CO2 reduction of about 15 to 20%, and we are moving on to Gen 3, which will be released in 2026. And the reason that we can reduce the CO2 is came from two things. First thing is that we replace and adjust the formulation and use the substitute materials in the formulation. And another thing is that we replace the coal usage by the use of alternative fuel, such as biomass, and these can save our costs of the production process and at the same time reduce the CO2 emission as well. So we are moving on in this part, and it also aligns with the net zero target that Khun Wachra just mentioned earlier as our key strategy to move toward the net zero. And as of now, as a 9-month period, we are at the 86% penetration rate of low carbon cement in Thailand, and we target about 100% in 2025. And we are moving toward in other countries, such as in regional or Vietnam as well. Next slide. And this is another key factor that help us improve in terms of cost efficiency and help us boost the low carbon cement penetration. This is the alternative fuel that we use the biomass, which we can secure from the suppliers nearby the factory about 200 kilometers. And as of 9 months, we reached at about 46% of the use of our energy in the production at the cement plant in Thailand, compared with the 40% last year. And key thing that we can help improve and accelerate in the use of biomass is that we make it condense and bale it at the smaller part, as picture here below. We call it the energy pellet. We pelletize it and make it smaller, and we can make it easier to transport. And also at the same time, we can increase the heat density inject in the production process. Next slide, we will talk about the wrap-up of the cement green solutions and penetration in regional, and wrap up all things that we have done. This is to be prepared for the upcoming carbon tax enforcement, which we are ready. And when it comes into effect, we can accelerating our use as of now. And in terms of regional, we also expand and just release the low carbon cement in Vietnam, which is comparable to Gen 2 in Thailand. And we are rolling out more and more of this. And this is the overall big picture of the movement of cement and green solutions business of the 9-month period.
The session has come to an end. So on behalf of the Stock Exchange of Thailand, I would like to thank you investors and corporate for joining the conference. We look forward to welcoming you all again in the next quarter. Thank you very much. ขอบคุณค่ะ
ขอบคุณครับ
ขอบคุณค่ะ ขอบคุณค่ะ
Thank you.